Next video in the series of the new strategy build, using an area chart, which you get to by appearance, area, chart type, and looking at marking off bull peaks and bear peaks. I'm just going to walk through today trading AMD. We'll start off the day with a 1 minute Heikin-Ashi candle chart, and we will mark off the pre-market levels. As we're looking at this aftermarket and pre-market coming into the morning, we see a peak right here. We see this bull peak right here, so we're going to mark that level off. We see a bear peak right here, mark that level off. We have a slight dip right here at the 06 level. Probably not worth looking at. And we can see as we come into the day, we break our pre-market 1 minute candle. We hit this bull peak level, and we break through it, and then we start to run. So we could take an entry at the break of this first 1 minute candle into this run. And the reason is we've broken this peak, and we're basically going to make a new peak, is how you can think of it. So we will stay in this 1 minute trade until we get stopped out. As soon as we get stopped out, we do not get into a short here. When we get stopped out, we're switching over to a 10 minute candle, 10 minute time frame. So let's switch back over. I'm going to switch to the 1 minute real quick, just so we can mark the time level. Alright, so we get stopped out right here. And we'll switch to a 10 minute. Alright, so we got stopped out in this movement right here. As you can see, that's just after this peak right here. So let's come back up to our area chart. So we marked off our pre-market bull peak and bear peak. We broke the bull peak and took a 1 minute, I'll call it a scalp trade, but basically a 1 minute opening trade, until we got stopped out on the 1 minute candle. And then we immediately switched to a 10 minute candle, and we start managing the area chart again. Okay, so we're going to mark our next peak. So time wise, we've just gotten stopped out. We're right at this time level, and we're going to mark this peak right here. So on the 10 minute candle, we can see that peak. We can see this candle hit it, this candle hits it, this candle hits it, and then we have a breakdown. Now it's important to note, right at this time point, we are sitting right at VWAP. So we can take an entry here, but it wouldn't be advised unless it's a 5 or 10 cent scalp. So we could take an entry at the break here with a stop here, take a 5 or 10 cent scalp. Just be very cautious, because we had a strong pull in the morning. This is most likely a pullback, and as you can see, it was a pullback, and we kept running. So the next level is a bear peak right here. And now we're looking to pull out of that bear peak right here. So we take an entry right here, pulling out of this bear peak. And I'm going to move our time frame just so you can get an idea. So we take an entry here, and we stay into the trade until we get stopped out. So let's move our time measurement over to where we get stopped out. On our chart here, you can see that we formed, by that time, we formed 2 new peaks. So we're going to mark those off. We'll just mark the top one. It's the most important. Let's reset our chart here a little bit. So we've had 2 solid good trades. We don't necessarily need to get into this short. We could, it would be a reversal. As we get stopped out, we would reverse into it. We do get stopped out here. There's no reason not to take the trade. We should be able to run back down the VWAP, which we eventually do. It's just sort of a sloppy trade, but it wouldn't have been a bad trade. So we pull back down into another peak right here. And as you can see, that starts to form our consolidation. So we basically formed a channel now. And we either have to break out of the channel to the downside or hit the channel, break through it, or peel back off of it. So obviously when you're looking at trades, you know, you've got this right here, you've got this right here, and you've got this right here. Probably the only other trade I would look at taking is possibly as this peak comes back up to this level, maybe get back into this trade to pull down through VWAP. Of course, by this time you can solidly see that we've got some serious resting consolidation going on. But it's you know, it's a bigger trade than it appears. So if we get into this trade at the break here, we're at 27.44, and it pulls down the 20, you know, back down the VWAP is 27.10. So that's, you know, that's 24 cents. That's a decent trade. But you can see how the channel formed. So let's go back to where we see the channel form. So we pull right back, we pull down here to this bear peak, and you know, we would see it form right there. And it basically gets our resting channel in there. And if we want to take some trades in here, we just need to know where we're going with it. So if I want to take a trade here, you know, it's a scalp trade. Just look how far we're off the channel. We're in the middle of the channel. So think of it that way. Where am I taking the trade? Taking the trade almost in the middle of the channel. And where do I have to go to? Up or down? Well, if I don't get a good pull, it's going to be a horrible trade. Conversely, as you see this pullback, peel back here, we get to the bottom of the channel, we could get into this for a ride up from 24 to almost, that's 20 cents. Again, right here, you know, are we going to take a trade in the middle of the channel? You know, this is kind of at the high side of the channel. That would be questionable whether we get in this. I really do like this trade better than I like this trade. This trade moves cleaner than this trade does. So that's basically it. I mean, we're just looking at you know, the peaks and valleys, the bull peaks, the bear peaks, and we're just marking them off as we go. I'll pull over MU real quick just to see what we have to look at. That was AMD for the day. Here's MU for the day. So if you look at MU, you've got a big peak pre-market here. You see these double peaks right here. You got this big peak up here, this bull peak up here. So that's what it looks like. And as you can see, our first, of course, let's look at the 1 minute as we come into open. Look what happens. We come right down and touch that. See that bear peak right there? We come right down onto it. And then we pull right back up, right up to the top of this bull peak. So we move from one side to the other. Where we would get in for an early morning trade on this would be very debatable. You know, again, looking at a quick scalp, depending on what we're doing. This candle right here, that's a non-tradable candle. We can't get in on the break of that candle. What we could look at doing is look at taking a trade to the long side off the bounce of this. So we have one candle hit it, we have another candle hit it, we come back down, touch it again, possibly take a trade for a 5-cent scalp to the upside as it pulls back up. Same thing here. We may take a short as we see it fail up here to the downside. That would be the morning trade, somewhere in there, and then we'd be out and we'd be looking at a 10-minute time frame. So when we switch back to the 10-minute, you know, we're a solid pull to the downside in the morning. We hit this level here, and then we pull down and hit this level here, and then as we come up, notice where we're sitting right on VWAP. So if we happen to take a trade, it would be a scalp trade. You know, we don't have much room to run. And as you can see, we basically formed a channel between here and here. You can see us trading in that channel, back and forth. And then what we're looking for here, the difference between here and here is this is number 1 and this is number 2. So let's add a timeline right here. So we got number 1, you see right here, we pull, get a bear peak right here. And then right here, number 2 forms. When we get into this consolidation channel, be real leery of taking a trade on the first pullback, on this first peak. Look for the second peak. And obviously this is a nice trade, a little hard to manage. You know, we might get stopped out here, but it's a strong pull from 42.42 down to I'm sorry, 42.65 down to 42. So it's about 65 cents. So again, that's just, you know, looking at the peaks pre-market, walking into a 1-minute chart, taking $100, $200 profit, switching to a 10-minute, and then looking for the setup, paying special attention to where we're sitting at VWAP, where we're at in the consolidation channel, and breaking in or out of that. Now, one thing to look at is you can see that we marked this peak off here, and we get a second peak right here. So as we come out of this area here, there's a possible trade from 65 on up to, well, we hit about 85, so it's about a 20-cent pull. You know, it's, you know, maybe not the safest trade in the world, but you know, we do have this, we have this peak and we hit to the second peak. Just pay attention, you know, pay attention to that level as you come back into that level. What's happening? Are we pulling through it? Are we pulling back? You know, keep some profit. You know, take profit at that level if need be. You know, what we want is a strong pull to the upside, to the downside. But what we end up getting is continued consolidation. So if you're going to take a trade in that consolidation, make sure it's more of a scalp trade, get some profit out of it, because we're waiting for that pull out of consolidation. We don't want to lose all our profits in this area. You know, this is resting. We should be getting our minds right and looking for the good setup during this time period, not actually taking trades. Anyway, so that's you know, the next iteration, the next rendition of what we're looking at for the strategy. There's nothing special about this area chart. The only thing the area chart does is provide, to me at least, provides nice crisp areas of peaks and valleys, what I'm calling bull peaks and bear peaks. You know, you could draw the exact same lines on a candle chart, but I just find it harder to see them. And after practicing on these area charts, it just seems like more often than not, the areas you know, become lines of support and resistance, and it's, I don't know, it just seems to set up better. And if you use, you'll notice, you see this is the close. So I drew this at the close. You know, obviously it's a key line, but we touch it. You know, I didn't even need that line because I had this bull peak right here. So I'm finding more and more that these areas where we have these peaks, they're lining up with other areas of pivots and consolidation, support resistance on further on the charts, and I really don't need those other areas. I can just, you know, mark off the levels as I see these peaks, and what happens is for the rest of the day I end up with strong levels to trade off of. I mean, you know, look at this. Say we didn't even take a trade until we broke this consolidation level right here. You know, that is at what, 42, let's just say 42.50. You know, that's still a 50-cent trade. You know, that's the A+ setup. So we ensure we break out of consolidation and we take the trade down for 50 cents. So anyway, that will do it for this video lesson.